Okay, now we're looking at the next question, which is question 17, which is a moving average question. It says on here you've got a moving average of a company called Rags Industries, which is a clothing business, and it's showing you a share price, which is the one with the full square in it, a 10-day moving average, and a 30-day. So this is kind of evening out the bumps over a 10-day range, showing the average prices every 10 days, and this one is showing the average prices every 30 days. So this one is going to be affected by short-term up and downs, and this one is going to take that smoothing out. Okay, so they can both be used to show you how well the market's going and when to buy and sell. So what investment opportunities are there for someone in this company to have them? Well, you'd be looking at the crossover here. Just in this bit here, it says a crossover between these ones. What does it indicate? Well, as you can see, the share price, which is this black one, is coming down and all the other ones have gone above it. So this is a very good sell indicator. So if you've got the shares, it's time to sell because they've dropped right down and they've dropped below both of those areas. Okay. If it was going up, that'd be a good buy because it's showing that the long term and the short term are indicating that it's time to buy. So remember, when the share price goes below the moving average line, you sell. When it goes above, you buy. Rags Industries has a ratio of a price earnings ratio of 10.3. Ozstyles, which does the same kind of thing, has a share price of $24.68 and $1.44 for the earnings per share. So price per earning ratio is just price on the top line divided by earnings, gives you that, which is 17.13, which is a bit stronger. It then says, isn't it reasonable to use the price earnings ratio to compare these two companies? Well, the answer is yes, because they're both in the same industry. And or the same sector is another way of saying it. So same kind of thing, sector. So it says, basically saying the same area. If you're trying to compare computers and clothing, you can't do that because it's not quite the same industry area. That last question is the interpretation bit of it. So notice that they have the routine to start with, and they get a bit trickier, and then there's the interpretation at the end. Okay, 18 is a question that does the division of company profits, and you really need to know how to do this because this is kind of part of the course, so it's important that you can understand this. So if you read the question, it tells us that they have a profit of $980,000 and they want to keep $494,000 for tax. So now you've got to work out how much is going to go to the preference shareholders and then the ordinary shareholders to work out this answer, because it says if you've got 1,500 preference shares and 1,100, show me that your dividend check is going to be $156. So first thing you need to do is find out how much money goes to all shareholders. This goes to everyone because it's the profit take away the costs and the expansions. Your preference shares get 2 million, which is the number of shares they are, times by the par value, times by 6%. So they will always get 120,000 to all the pref shareholders. Okay, so it goes to all of them. The ordinary shareholders then get the leftovers, so there's 486, which comes from this bit here. Take away 120,000, gives you 366,000. That goes to all the ords. Okay, all the ordinary shareholders. So to work out the div per share, you just get the amount of money they've got divided by the number of shares, which is 6 million, which gives you 0.61. So it's around about 6 cents per share. The question then says, okay, if you've got this many shares in terms of 1,500 preference shares and then 1,100 ordinary shares, how much money are you going to get? So it's just a calculation of 1,500 preference. Now remember, when you do the preference ones, you just times it by the par value, then times it by 6%, which is 0.06, which means there's $90 coming from them. The ordinary shareholders have 1,100 shares at 0.06 cents per share, and that gives you $66. So when you add that together, you get $156, which is the same as what they said here. Okay, so you've had to solve it by finding out how much money goes to all the shareholders, which is in here. Then from there, you work out how much goes to the preference shareholders, how much is left over to the ordinary shareholders, convert that to a div per share, which is cents per share there, and then you do the final solving there. So that's worth 5 marks. Okay, so it's quite complex. The mathematics is quite easy, but the complexity comes into the fact that you actually got to take a lot of things into account. The next part of that is a dividend imputation question. Once again, these things will be in the exam because they're part of the course. So you get this money and you get a dividend payment. So this is how much money comes to you. $66 comes to you, and the $28.29 goes off to the tax man department. Okay, it goes to the tax department, so you don't even see that. So the only thing you get in your pocket is the $66. Your income declared, though, however, are these two things together. So it's the $66 plus the $28.29. That's how much the tax department thinks you've earned all over. So your income declared, which is the first bit, is 66 add 28.29, which gives you $94.29. So that's what they think you have earned. Your tax liability then is your $94.20 times by 0.4, because 0.4 comes out of here. It's your tax rate. So you should be paying $37.72 in tax, but you've already sent off the $28 to the tax department. Okay, so that's already been sent off. I'll just bring the page back. Cool. So the $28 has gone off. So how much tax do you owe? Well, you grab your $37.72, take away your $28.29, means that you still owe this outstanding amount of $9.43. Now the way you could check that is that the company tax rate is 30% and your tax rate is 40%. So therefore you're going to have to owe a bit more money. So it's asking for your after taxation return. Okay, so now you grab I got paid $66, but I still owe $9.43. So it's 66 take 9.43 gives you your after tax return of $56.57. So that's your after tax return. That's how much money you get.